Welcome to Breaking Banks Africa. I'm Matteo Rizzi, and together with my co-host Nadine Doro, let us take you on a journey of entrepreneurship, innovation, and vibrant ecosystems Africa has to showcase. More than 1 in 4 people will be African by 2050, this continent being already the youngest of the planet. You can't miss these stories. This is Breaking Banks Africa. Let's roll.
Hey guys, welcome back to Breaking Banks Africa. I'm Matteo Rizzi, the executive producer of the show. This is show number 5, and I'm super excited. You will see why, but we're going to talk about a super hot topic with the two founders of Mansa, Nkiru and Mouloukou. Guys, welcome to the show, and you're allowed to do it, to sort of jump in at the same time. Welcome.
Thank you so much.
Thanks
Thank
so
you so
much for having
much,
us.
Matteo. It's an honor, I believe, for the both of us. I guess I'm speaking for the both of us to be here right now. So thank you so much for having us.
So, Mouloukou, can I say more? Like, I'm going to steal the way that Nkiru just called you in the prep. Can I?
Yeah, of course, you may. You may.
Great. So let's give you a minute to share the stories. What brought you to Mansa. I know a micro part of Nkiru's story because we shared a past at Swift, both of us, curiously enough. So maybe Nkiru, you want to start?
Oh, sure. So actually, as you know, my background is I used to work at Swift, and so spent some time really looking at the cross-border payment space. And actually, lo and behold, at one of the conferences that I was attending as a speaker, I ended up meeting Mouloukou, and kind of one of the synergistic points we were discussing is ultimately, the landscape in Africa, and specifically in financial services and payments infrastructure, and where some of the opportunities were lying. So kind of fast forward 5 years later, as we were keeping in touch and always looking at opportunities to work together, Mouloukou approached me about Mansa and was saying, hey, you know what, I think there's an angle here for payments and I really want to explore this with you. So we started to really double down on understanding what some of the bottlenecks are within payments infrastructure.
Great. Mo, what were you doing, when she was at Swift?
I was actually working for a boutique investment bank in Hong Kong at the time. It's actually very funny when I met Nkiru and she told me that she worked at Swift. I told her Swift sucked, right? Because for me, as somebody who's always lived abroad and who's always had to do international wire transfer, especially coming in and out of Africa, it was so difficult. Sometimes the transfer doesn't arrive. Sometimes I gotta go back to the bank and I gotta provide so much information. Or when I use alternative methods like Western Union, I'm paying 5%, right?
Yeah.
So we bonded over that, and I guess from there, her and I stayed in touch. I then went to work in private equity, ran a $2 billion consumer growth equity fund. I then led the largest Web3 focused fund on the African continent at the time called Adaverse. And started Mansa about 2 years ago. And it's been one of the most wonderful journeys working together with Nkiru here.
And Nkiru, I mean, what did he say to convince you? Was it hard to take you away from corporate life?
Yes,
you know what? Actually,
I was trying to convince
untrue.
I tried convincing Nkiru to come and join me. I think since I met her until maybe 2024, which is 5 years, I kept telling Nkiru, let's do this together, let's do that together. He's like, oh, you know what? Let's talk about it. Nkiru always says.
No,
and I finally managed to convince her.
No, I think, everything's synergistic, right? At the end of the day, I was, I think, on a mission within the corporate space to really try to build products that could move the needle. But I think after some years of really being within kind of like both the venture building and the product development kind of net new life cycle, I realized to incubate anything internally at very large organizations that have a lot of like legacy processes, legacy technology, and sometimes also maybe legacy mindsets or red tape. It's extremely hard, and that if you really want to build something that is exponentially adding value and potentially breaking, not some rules, but some rules of thinking, then you need to do that outside. So I actually had already left the corporate space and kind of just figuring out what I wanted to do next. So Mouloukou, in that literally same moment, it's as if his ears were burning and he knew. We just started talking about, again, the early days of Mansa. And I've always like really loved Mouloukou's energy and really loved like his way of thinking and like, pushing the boundaries. So I was immediately like, yeah, of course, like tell me how I can help. I'm curious about what he was doing. And then we met up in person, actually in Dubai, and we're just like, yep, 100%. Let's like just work together. Let's make it happen. So it wasn't that hard to convince in the end.
Amazing. So, okay, Mo, I'll let you do the honors because you were the one who sort of hustled to bring Nkiru in the team. So I'll let you do the honor. Like, give me the 1 minute pitch of Mansa and what problem. I know exactly what problem you're solving. We already talked about it, but then we'll start actually to get into the conversation.
Yeah, so I think what Mansa like is doing, and like our tagline is, transforming the way that money moves, is that we are trying to create the infrastructure that enables the seamless settlement of global transactions 24/7, and on top of that, creating the necessary environment as well that enables for different products like to be built on top, right? Like such as like foreign exchange and payouts. But fundamentally, the biggest issue that we're solving right now is the issue of pre-funding. So international cross-border payments relies heavily on pre-funding. That is when a payment company, no matter if you're a B2B payment company or if you are a virtual card provider or if you're an OTC on and off-ramp company, is that you must keep enough capital sitting in different bank accounts around the world so that whenever you have a transaction there, the funds are taken from that account and you can instantly settle. So technically, as a payment company, no matter what vertical you're in, your limit on how many transactions you can do is actually capped by your own balance sheet. So that's why we're like, when you look at the international cross-border market, it's really a duopoly between Western Union and MoneyGram because they have the biggest balance sheet and they have the ability to scale and be in all these different like locations, right? Like I remember seeing a map of, I think, of Wise, where they were like, we have a global infrastructure, but we're like in 7 countries. Right. So it's impossible to go like beyond that. And the issue is the lack of liquidity that they have. So what we do is we work with some of the largest payment companies in Africa, Latin America, and Southeast Asia, and we give them the necessary liquidity in stablecoins that enables them to settle transactions instantly across the whole world. So we've done around $100 million in transaction volume in our first 7 months, and most fintechs that we work with have increased their transaction volume by 30% because now they're able to do many more transactions, larger transactions, and they have increased their revenue by 10% as a result of that too.
You mentioned, and this is for Nkiru, you mentioned the fintechs sort of increasing their trade, thanks to the Mansa solution, and I am super familiar, right, with the business. Not only thanks for my to my business days, my Swift days, but also because this stablecoin, the stablecoin option seems the more natural, right? Not only for fintechs, but also and especially for all these billions of dollars that are sitting in corporations in local currencies and need to get out, right? And in Nkiru, you're in Brazil. The South America is one of the main spaces, right? Today where big corporations have this problem. So my question is, why is the traditional financial system, falling short, right? And do you think that a startup or a series of startups like Mansa can actually overtake the market?
Yeah, great question. I think what's fundamental and important to understand is most of the, financial services infrastructure has been built something like 40 to 50 years ago nearly, right? So if you put that into perspective and you think about all the technological, changes that have happened or evolutions that have happened, whether it was, the advent of the internet, whether it was cloud infrastructure, whether it is now AI, blockchain, these are all really fundamental points whereby infrastructure and the logic of how we design infrastructure or architecture has changed. And I always say, if you woke up today and we had no payments infrastructure, how would you build it? The truth is, you would not build it how you built it 50 years ago, right? With all the tools and with all the technology you have today, you would build it different. And again, maybe in 50 years, we will be wrong. But today, the truth is, that we would most likely build it with blockchain, right? And we would build it with stablecoins, i.e., digital programmable money that is easily traceable, right? And that has true value in the transaction itself, not in needing to do that off basically the base, i.e., with a messaging structure and then a settlement structure separately. When you then fast forward that into like a realm of looking at emerging markets, right? Historically, emerging markets have just been on the tail end of that because of many different reasons. One is because infrastructure investment was even more expensive to invest in and to leapfrog as they needed to catch up. But now, obviously, if you're thinking about, okay, would I rather invest into an ISO 222 standard, or would I rather invest into potentially looking at a secure infrastructure where I can do actually a transaction cross-border with stablecoins? I know what my answer would be if I was an executive, right? Especially if I were to look at the performance of my organization or even of a bank in the next 10 years, right? In the competitive landscape. To then the second piece of the question in terms of, okay, well, what does that look like? Can one fintech take it all? I am a firm believer always, and I've always been, that the market is so big and the world is so big. Anybody who has that ambition or has that, aspiration is just a little bit deluded. But secondly, also, I
want
believe
it all.
Yeah, Mouloukou does want it all. But we believe though that that there's a way where we can ultimately collaborate across the board because the problem is so complex and big, and there's nuances in each local market where it really is like understanding what are the ingredients. I.e., one is liquidity. The other one is infrastructure. The other one is like being a stablecoin issuer, right? We believe that there is this collaboration that needs to happen fundamentally in order to actually move the needle exponentially, right? And that's why we are actually working in many different regions, from South Africa, Kenya, Nigeria, Ghana, Brazil, Philippines, Indonesia, right? In those emerging markets, Brazil, of course, to ensure that we're having the partners that we're collaborating with that are doing something fundamental and instrumental for their local ecosystems, and connect them globally and enable that 24/7 settlement platform that is able to provide the necessary liquidity to ensure that these settlements can happen in like sub X amount of minutes or even seconds.
Mo, how are you going to take it all?
I think, okay, so I fundamentally agree with what like Nkiru says, is that we have to work together. Like we have a series of collaborative like partners, but at the same time, somebody needs to orchestrate everything. This only works, right? Like the entire system only works if there is orchestration. Because what you have right now is that, okay, yes, stable coins are becoming the dominant form of payments in many emerging markets, and you have many players that are solving key fundamental issues with stable coins, like the on and off ramp, payouts, etc. But they're doing it market specific. Now, if I'm a global fintech, I don't want to like integrate with just everybody, right? Like I don't want to go to Indonesia, Philippines, so on and so forth, right? Or else it's going to take ages. And then there's really no difference between the current technology like that we have. So essentially, you still need somebody to be able to orchestrate it and to able to provide the liquidity so that this happens. So essentially, what Mansa is and what we are trying to be is that we want to be the engine that powers this entire ecosystem, be it from providing the liquidity that they need for orchestrating the like different payments, or like providing the effects on chain, off chain, right? So like I think we aim to play and like hope to play like a very like crucial role in like advancing the future of stablecoins in emerging markets.
At the same time, and I could name probably easily on the top of my mind, but we won't do it because we will let our listeners to do it to do their homework. There are like a few stablecoin players, African and not African, recently funded. Some of them also by the same guys that put money on Mansa recently. And I think the reason is my own view, the reason is double. On one side, indeed, the market is so big that if you start going, for example, in the corporate world, but I want to talk and ask the question under your supervision, right? And then you tell me if I'm just talking shit or not. But if you get into large corporates, you need volumes that is not easily scalable, right? So, and I know that there are some of these players that have been built and they live with 2 or 3 large accounts that move a couple of 100 million each, and the difference between the traditional way of doing it and the stablecoin way of doing it is that 3 or 4% that makes, a good startup living already. So that's on one side. On the other side, there is so much that like a fintech at the beginning, no matter how well funded it is, can scale in different territories. And we are now between Berlin, I believe New York, and Brazil. There are still 197 countries out of this scope, and paradoxically speaking, the most complicated countries are the one that need this solution the most. So my question, I guess, is how do you see this collaboration? And I actually don't think it's particularly bad because you actually don't need this solution to be interoperable, right? Am I wrong?
So I think, I love this question because I think fundamentally it takes us to the start, which is what is needed in order to facilitate a transaction today? It's money. You have to have money in order to do a transaction. Like capital needs to exist. Now, the question is, where does that capital come from? I said, most of the time it's come from like treasury, because again, the long tail of like maybe like 500 million to like 5 billion type of companies in terms of annual volume might have here or there, like, different levers in terms of where they can get this capital, right? Then you have like the bigger, folks who ultimately get it because they've raised debt or they've raised a $90 million round in order to facilitate this B2B payment, right? So there's many different angles, but I think what's really, really key to note is that the issue that exists today is that every single part of that ecosystem somehow needs pre-funding. So Visa wants to be pre-funded. The merchant wants to be pre-funded. Then this person wants their money instantaneously, right? So it is because of the nature of the sheer complexity of like this need to have the money before everybody else to limit risk that puts payments players in a very precarious situation, which is you have to kind of wait until basically something settles back in order for you to have it back on your treasury. This is not scalable, not at pace. And we're now in an era where you either compete today or you don't compete at all. And so in order to be competitive, you're going to look at what is your competitive edge and you're going to go and source more money, right? More capital. And we believe that it shouldn't be rocket science, and it should also not be reserved for a few that can go to major banks or who sit in the global north. We believe that it should be, if you ultimately have a healthy business and a business that can be underwritten from a risk perspective, you should be having access to something that is ultimately an operational tool. right? Just like anything else. And it should be like, if that is the case, you should always be able to have a way to basically accept a transaction on behalf of your customer where there's demand. You should not be turning down $3 million of transaction because your treasury today somehow had a backlog. And that is what we're really trying to unplug, right? And so in terms of your questions, like how can this scale? The beauty of this is, right, is that because we're sitting in the middle as a provision layer, right? Providing to these payments companies. We're not doing the, let's say, business of the partners we have. We are actually just enabling, empowering the businesses so that they can scale more, so that they can actually get the demand and settle that demand, right? So that's really what we're focused on. And then to Mouloukou's earlier point, then we can basically build other type of essential, value-added services on top of that, that matter to that ecosystem, like on-chain FX, where many of the localized stablecoins need that other pair, right, in order to basically make their localized stablecoin available. But you have to have that foundation layer, and it starts with, ultimately enabling everybody to have an equalized amount of liquidity.
Mo, I want to like you to build up on Guru answer and maybe add I want to say the regulatory flavor. So because it looks like the what do you think the role of the regulators in this business is going to be? I mean, I try to like put my head around it, but are the regulators equipped to actually to face this new wave of business, you think, or they will catch up?
Yeah, I think, okay. So what does Nkiru always say? Nkiru always say that Mansa, we operate in the in the mindset of regulatory clarity. Sorry, what do you always say?
We operate in the spirit of regulation.
Regulation, that is it. That is it, right? So like we take a very forward thinking approach to like regulation, and we have invested heavily in regulation and in like compliance like as well. So we recently brought on somebody called Fela Bankole, has over 20 plus years experience in regulations and in licensing as well, was previously at HSBC and at Franklin Templeton as well. So yeah, so like I think that the role that regulation has to play, and the US is leading the line in this, is that we need to have clear and concise stablecoin regulations. I believe that stablecoins should be regulated different than a lot of the other things that are happening in crypto, like tokenizations or like tokens and stuff, which are fundamentally securities, right? So I think what we need to have first is clear stablecoin regulations. And because in some countries, stablecoins aren't considered an asset. So even though if you and I might still like consider it like a digital representation of the like US dollars, but in many countries, I think in Colombia or Mexico, the stablecoin is not considered like an asset, right? So it's kind of difficult to build a business there.
When you mention these two countries, I almost wonder why, right?
Yeah, exactly, right? But of course, it interferes with the fiat currency. But I think if you look at it like the other way, is that when you look at most emerging market currencies, the reason why there's such high currency like devaluation is because there's a lack of liquidity in the FX market, and because it's always one-way liquidity like going out. But then like if you really look at the like dynamics, there's also liquidity coming in. So and I believe that stablecoin makes the spreads tighter, and because the spreads are tighter, because there's more transparency and because there's more volume happening, that's when you can actually help like devaluation. So I believe that a lot of countries should be embracing stable coins, and especially in reducing the cost of international like transactions. Because if you think about it, if I'm a big oil person in Nigeria and I have all my oil imports in US dollars, but the bank cannot give me enough fiat US dollars, what do? I need to use stablecoins.
Yeah, what I wanted to mention as well on terms of like on the regulatory side, I think another kind of jurisdiction or regulator that we think is really forward leaning is ADGM in Abu Dhabi. We really see kind of what they've been developing in terms of the regulatory framework for stablecoins, actually as extremely accurate in terms of how stablecoins should be used as a kind of tool to facilitate the payments. And we really love what's been happening in that space, and we see this as a good kind of yardstick or guidance for ultimately for the global south, right? And so, and we're seeing many payments companies come also into the Middle East from other jurisdictions because of that regulation. So we also perceive that this combination between ultimately what's happening in the US and what's happening in places like the Middle East is actually going to be a hyper catalyst. And then you're going to see many other, and it also recently happened like right in Thailand as well, but many regulators are starting to basically share certain type of like frameworks that, yes, need to evolve. Yes, I mean, if you're asking folks who are probably in fintech and Web3, is it where it needs to be? No, but it's already, I think, such a refreshing uptake from where we were this time, same time last year, right? As in the last like 6-7 months, like things have really looked up for the market, and I think you see that same bullishness in representation of how the stablecoin market volume has been growing.
Question for both of you: the fact that in certain cases the regulators are playing catch up. Let's call it cate, as we say in Italian. Does it make more difficult to sell to large corporates than to sell to fintechs? Because like fintechs, they have the infrastructure, they have the mindset, they are maybe more risk taker. At the same time, they don't have the same volume, that are, that make, a company like you guys survive, right? So you want to maybe go to large manufacturers like industrial, like oil companies, like an oil company in Venezuela, get like a local currency stuck, and it might be a branch of an Italian or a German company. I'm making these examples so that our listeners can, get also a sense of concretely, what the problem or one of the problems that stablecoin might solve. So, is how complicated it is to sort of pass that resistance to innovation in terms of transaction with large corporations?
I don't think Matteo, sorry to like cut you off, right? But I think that like if you look at like cross-border payments, the pricing has become commoditized, right? Like it has already like, and if you look at the trend into like how much is being charged, everything really has stabilized for the past 5 to 10 years at 1 to 2% like per transaction, right? Like that is like the floor, and Western Union charges 5%, and all the companies charge like between this. So on pricing, you can't really compete on pricing anymore. So the only way that you can actually really compete as a payment company is ease of payments. How large of a transaction can you settle for me, and how quickly like can you settle for me, right? And I think that stablecoins are right now the only way that a lot of fintechs can really compete in the market. So for us, it hasn't been trying to convince these large corporates. It's a lot of these large corporates and a lot of very, very large established fintechs on the African continent that have been operating for the past 20 years have actually approached us and have actually asked us, we want to start using stablecoins. How can Mansa help us use the stablecoins, right? Because I believe that stablecoins are the future in emerging markets, and that soon 80% of transactions will be mostly on-chain.
And to add to that, I think, again, each market is different, right? But in terms of its maturity, in terms of its institutional adoption, in terms of its corporate understanding, willingness, right? I think to caveat that, first and foremost, I think we need to remember that stablecoins should be treated as a tool, right? Or as a currency that is a tool. And that therefore the question begs whether, how much visibility does the average, let's say, target user need to have as to the fact that it's stablecoins or it's fiat? I mean, nobody cared when it was pre-funding and fiat sitting in different locations. Everyone was like, oh my God, I'm getting my money quicker. And that's all ultimately that people care about, right? I want my money to be safe, i.e. secured, and I want to have my money now, right? Those are the two things fundamentally any average like target user who's receiving or sending a payment cares about, right? And then the other thing as well, in terms of the market maturity, for example, here in Brazil, very interesting, like, again, the maturity in terms of like both the collaboration between the fintechs and the banks and the regulator, but the Brazilian ecosystem here has a full and very comprehensive, deep understanding about the immediacy and the relevance of stablecoins. There's no debate. If you go into a bank, whether it's like BTG today, and you say, "Oh, how do you feel about stablecoins?" They'll tell you, "Yes, we need it in order to make trade finance more efficient and more real time, and in order to trade with China." There's no debate about that. There's literally no debate about that. The debate is more of like, fine, how do we then regulate that? Who's allowed to have a license? What can they do with that license? But that's where the current conversation is. It's not about whether stable coins are good or bad, right? It's more about like, how do we make sure that it's governed the correct way? So I think each market is actually very different. I think I would love to see more of this kind of sharing of this information of what's happening in some really mature markets that have really adopted stablecoin as the de facto way to move money and move it in the most efficient way, especially for trade finance, right? And for other places to learn about that, to recognize like, stablecoin is not the devil. And actually is probably the most efficient and best practical way for us to trade today.
I'm not surprised about the mindset of the Brazilian banks. After all, you're in the cradle of the instant payments ecosystems of the planet. Actually, guys, our time is up, but I want to do something actually live here. This show is going to be aired in a couple of days, but I want to invite you guys live at our GSME Finance Forum that we are organizing in September together with IFC. So with Jeff Yan is organizing this forum. Trade is going to be a major topic of the conference, and I would like both of you, but if not one of you, to come over, because I believe that some stablecoin evangelization, will be needed, at the event.
Yeah, would love to. Just send us the dates.
Anyway, yeah, let me use this 15th to 17th of September in Johannesburg,
nice.
South Africa. So I'll make sure you guys get the invite. So
I love South Africa.
So do I. So it was amazing to have you. Thank you, Nkiru. Thank you, Mo.
Thanks so much, Matteo.
Thank you so much.
I really appreciate it.
It's a great conversation. I didn't even realize that almost 40 minutes had passed.
Yeah, I know. But it's the beauty of it is that now people will know your faces, and we'll make sure that this gets the right visibility. Guys, that was Breaking Banks Africa, episode 5, and this is a wrap.
Thanks for listening to Breaking Banks Africa, a Provoke Media podcast in cooperation with timepledge.org. Don't forget to share us out or shout out across social media. If there is something or someone you would like to hear on our cast, let us know. See you next month on Breaking Banks Africa.